In this video, I'm going to teach you candlestick chart secrets you ever need. A lot of trading context does not give proper education on trading candlesticks properly. You would find out that a lot of guys will actually be teaching you this subject, trading off the weekly or even the monthly time frame, which is not useful to day traders. So this is probably why you are still losing. Although you memorized a ton of candlestick patterns, the bullish engulfing, the bearish engulfing, all those, but you are still not profitable. What if I tell you that you only need to master one set of candlestick patterns and the one trading zone to look for them? So in this video, we'll only talk about the railroad tracks and high rejection patterns. And these are the only candlestick patterns that are necessary for you to look for in the market. So what are railroad tracks? Railroad tracks are basically two candlesticks of the same length like these, right? And the high rejection patterns are candlesticks that leaves wicks on the side of rejection. So let's simplify everything here. We are definitely going to look for one, break of market structure. It is the one thing that gives us the bias of the market. Then number two, locate yesterday's high or yesterday's low. That is our region. And then from those points, that is where we draw a zone and look for these particular patterns in those zones. So as you can see, there are only 3 steps that you are going to be looking for: break of structure, yesterday's high, and create a zone to look for these patterns. Let's go over the charts so that we fully understand how it's done. So the first thing that we are going to do is to put period separators, right? We just simply go to settings, mark session breaks, and boom, our chart is now separated in days. We are on the H1 time frame, so it means these periods between these lines are actually equivalent to a day. So the next thing is now to look for break of structure, right? So I'm going to mark my lowest points or lower lows with a horizontal line so that we clearly see if the market has broken structure. We can see that when we were coming from this point, we went past through this low, signifying break of market structure. After the market is broken, we can now say we are now in a downward move or a downtrend. In this case, we are now only locating the yesterday's high. That's now our second step, to locate the yesterday's high as our zone to expect and see the market rejection. So in this case, we can see this day, on this particular day, we had opening high and it's close at this point. Therefore, our yesterday's high for this particular day was this one. The next thing is now to drag the high region, right? The high region of yesterday's high and protrude it into the future so that we look for the candlestick patterns that we want, right? Mind you, this is for intraday trading or day trading in short. So in this case, after dragging, this zone was now our reference to look for those candlestick patterns that I have shown you earlier before. In this case, we can see that we had a retest at this point. Did we get a candlestick reversal? Of course, we can see there was a high rejection pattern. Let me zoom in. We had a high rejection pattern in this at this point. This was the rightful candlestick that we saw earlier in my example. So our entry was going to be below this candlestick or at close of this candlestick. Mind you, you can actually adjust and trade off the M15 time frame if you have sufficient time to look or stay at the markets. So that was a point of entry. The market gave us, probably, if we can count the pips, it was 92 to approximately 45, which is around 45 pips in profit, and stop loss was going to be above the structure. In this case, was going to be above the rejection candlestick. So let's go ahead to see some more points where we could actually make use of. In this case, the market actually changed or broke structure now in an upward context. We can see the first break of structure was issued at this point. Break of structure. The next thing is to respect yesterday's low or yesterday's high. In this case, we are now talking of yesterday's low, since we are now in an upward structure or upward market move. So on this particular day, this was yesterday's low. That is when we expected to see the market to come and retest. Unfortunately, it did not do that. In this case, we had opening yesterday's low at this point, and then close of the market for that day at this point. So our zone is going to be this one. It was yesterday's low for this day. And what did we get? We can see that we had some sort of railroad track or a low rejection candlestick pattern. And that is where we were going to make our entry, and the market went our direction, right? Mind you, this is euro against dollar, and now this is where we are. We can see another break of market structure at this point, signaling that we are now in a downward trend. We were looking for these points, the highs of the previous day. In this case, we can see that the high of this day was this point, right? Dragging this. On this day, we had this as our high of yesterday, and we had a candlestick reversal pattern. A railroad track was issued at this point, right? A railroad track. From that railroad track to the lowest point that we could catch, there was approximately 53 to 53, 97, 53 to 70, over 80 pips that were available from this point to there, and it was actually sufficient for us to get what do we call a 2:1 reward to risk ratio, right? On this day, what was our yesterday's high? Our yesterday's high was at this point, but are we still in a trending market? We can see that we are no longer in a trending market. So to simplify everything that we have said the first thing is actually to see break of market structure, location of the yesterday's high and yesterday's low, draw a zone and look for these only two set of patterns. On that note, we come to the end of this video. See you on the next one.